Hey, welcome to the 40 Finance channel, everybody. Today we're going to look at the Seeking Alpha Quant ratings to see what do they have in terms of top stocks that they see in the market right now. And the purpose here is not necessarily to run out and buy all these tomorrow. It's just more like getting a different opinion, taking an algorithm opinion towards stocks. If you're like me, you look at some of the same stocks over and over again. So it's good to take a fresh set of eyes and just see, what does the quant formula see in this crazy, crazy market that we have going on right now. And just a quick overview of what this quant formula is all about. It looks through nearly all U.S. securities, and it picks stocks with the strongest collective value growth, profitability, EPS revisions, and price momentum metrics versus the peers sector. Okay, so it's very sector specific in that way. These attributes are assigned grades that are then weighted to maximize the predictive value. The best stocks are awarded a strong buy rating. And we're just going to pick through some of the strong buys here today. Over the last 12 years, the back-tested strategy has delivered impressive returns, beating the S&P 500 every single year. Now, as we go along and look at these stocks, if you're interested in learning more about the quant formula, potentially combing through these stocks yourself, I'm an affiliate of Seeking Alpha. It's a service I use on the channel all the time, and my affiliate link is in the description and gets you this deal here, 12 full months for $99. And I believe... let me check on the free trial aspect. Yeah. So you also get a 7-day free trial before your card is charged. So you do sign up, you put in your card, PayPal, whatever you're doing, but you have 7 days to try it out, and you can cancel if it's not, let's just say, what you thought it was going to be. All right, let's dig into these names. You get to the quant score, or the top stocks by quant score. It's already filtered out for you. Just click on here, top stocks by quant. And then typically for me, I just go in and make some minor adjustments on some things that I'm just really not that interested in looking at. So in this case, I made sure that the country was United States because that's where I live. And in terms of sector and industry, I'm going to take out a couple. I'm going to take out utilities, and I'm going to take out energy. And again, that's just my preference of stocks that I'm looking for. I think energy and utilities, it's much more commodities based as opposed to, let's just say, earnings and stock market momentum. So I'm just going to eliminate those. And that leaves us, the other thing, I did add a market cap filter, okay, because I'm looking for stocks that, I try to stay into large and mega caps here in this crazy market. But worst case scenario, we want at least $1 billion market cap, or I should say I prefer at least $1 billion market cap. Let's make sure we're not playing with penny stocks and stuff like that. And then the quant rating, the strong buy signal for Seeking Alpha runs from 4.5 to 5.0. You can see it's strong buy across the board. And then we get our stocks down here. And these are ordered by the quant score. So at the very top, 4.98, you have Allegro MicroSystems. Then you see off to the side, you have your 5 components that they talked about that build into the quant formula. So in this case, valuation, they're giving Allegro MicroSystems a D, and that's sector specific. But then it has strong scores across growth, profitability, momentum, and EPS revisions. So let's start with this one. So here we are at the stock page, a lot of information on here. As you can see, going down, you get the Seeking Alpha versus Wall Street ratings. This is in terms of writers versus Wall Street analysts. And then you get the company profile. So I don't follow Allegro, so I'm just going to make sure I understand the company. They design, develop, manufacture, and market sensor integrated circuits and application-specific analog power ICs. Very complex stuff. And if you wanted to click on their website, let's see what comes up here. Maybe it'll give us a quicker look at what's going on. Looks like related to the EV industry in some ways. So that's just a quick overview. But the real things that I'm looking for here is valuation and growth. Okay, so let's take a look at the valuation first. And what we have, PE non-GAAP looking forward, you got a 35.48. The sector median's 19.27. And normally, I like to compare it to the 5-year average just to give us some sort of benchmark, right? So 35.48 compared to, let's just say, a normal tech stock, you might consider that to be a low forward PE, right? Depending on the case. The easier way to do it, if you're looking at individual stocks in Seeking Alpha, is to use this 5-year average. They don't qualify for that. This could be a relatively new stock. Perhaps it IPO'd a couple years ago. Perhaps it IPO'd today. I honestly have no idea. But without that valuation comparison, it's hard for me, anyhow, to sort of feel out where this one has been, right? So we can look at growth, and we definitely want to see double-digit growth on these, and revenue growth going forward, 21.38. And then if you go down and look at EPS diluted growth looking forward, that's a 43% increase. So those are good numbers. I just don't have anything to compare it to, so this one is not going to be for me. All right, number 2 on the board is United Airlines. And I was kind of surprised to see this one here, only because they recently had an earnings call where I think, here's the headline, United Airlines stock slips on pessimistic Q1 forecast. So you could argue that the momentum on this one's down a little bit. But if we look at growth, revenue growth forward, 31.43%, far and above the United Airlines 5-year average. Now, their 5-year average is going to be obviously skewed for what happened in 2020. So you might have to dig in a little bit better to figure out, what's the average there. But even on the sector median, which would include other airlines, you got 8.38 revenue growth on the sector median. It's plus 275% versus the sector, so very interesting. And then on a valuation score, non-GAAP forward PE of 542, well below the sector median, well below the 5-year average. And then if you're going to get into GAAP metrics at 551, again, well below the sector median. For some reason, it's not displaying a 5-year average. So United Airlines looks very intriguing right now. I was wondering if they did a dividend. I don't see it here, and that could be due to COVID. Maybe they suspended it. I'm not sure. But this one could be interesting to look at least from a fundamental standpoint. All right, I'm going to skip a couple here. Berkshire is very hard to do on a fundamental valuation and growth prospect mode. It's just a different kind of company. I'm going to go to Axcelis Technologies, which we have right here. And Axcelis Technologies designs, manufactures, services, ion implementation, and other processing equipment used in the fabrication of semiconductor chips, U.S., Europe, and Asia Pacific. All right, so we know what's going on with chips in the long run. Can this company continue to sell their service? And it looks like over the past year, it's been a strong run. Let's look at the forward metrics. 1 second here, go to growth. All right, revenue looking forward, right? Because the past has already happened, that's likely built into the stock price. 18.43%, that's above the sector median and just barely above, well, I shouldn't say barely, but it is above their 5-year average, about plus 22%. If we go to valuation, all right, we got non-GAAP forward, 2152. That's right in line with their 5-year average. And if they report in GAAP, 22.14, slightly below the sector, slightly below their 5-year average. So the one thing that I'll call out here that would, at least for me, require a little bit more investigation is you have revenue growth 18%. That's off of last year considerably. Maybe that's not a surprise, but it's not a huge boom to the 5-year average. And then when we looked at valuation was right in line. Okay, so it doesn't mean that this stock won't go up, But I would just say for me, fundamentally, it looks like it makes sense at the current price. And then what you have to go from there is dig through, all your earning report data, whatever else you can find on the street, and try to figure out, can they outperform? All right, on the revenue side, can they outperform on the EPS side? Build a hypothesis there, at least in Seeking Alpha's world. If we go look at this across the board, they're seeing the same thing as me on valuation, but they've got some strong scores, particularly for momentum right now, A+. So there could be a deeper story to look at here. All right, how about First Solar Incorporated? Obviously, solar stocks have seen quite an uptick over the past few years. It will be interesting to see how they fare with energy prices coming down, right? That's a key argument in the short term for solar. You also have the expense to build solar operations, particularly on a residential scale. Are people running out of money to try that experiment? Tough to say, but at least for today, from a valuation perspective, P non-GAAP forward, so they're going from, negative basically, and then hopefully they get into this 29.11. That's still 18% higher than their 5-year average at 24.50. Then if we go, it's basically the same thing on the GAAP score, 29.01, slightly higher than the sector median. Non-GAAP is much higher than the sector median. So with this, you're paying a valuation multiple that's higher than the sector median, arguably higher than the 5-year average. That means we need to see outsized growth, right? There has to be a growth story that's beyond those things to kind of justify the valuation multiple. Let's see what we got. Revenue growth forward. So last year was minus 10%, so a down year. This year, plus 15% projected. 5-year average, single digits, so significant increase over at least the 5-year average. Then as far as EBITDA growth looking forward, if you want to get into that, last year not so good. So this could be a recovery story, because this year plus 36%, it doesn't really dig you out of this hole, but it's still much better news than this. And that's 24% above their 5-year average, also above the sector median. So there is some good things here, particularly on revenue growth, where the sector median, is right about 10%. They can do better than that, at least on paper, by another 50% on top of it. That probably explains this multiple. I would say, you could always argue, can I get this one cheaper? Can I get it closer to the 5-year average, knowing that their revenue is projected to outperform? All right, let's hit another one here. TravelCenters of America. How are the roads looking in terms of vacations, summer trucking, all of those things? And you're at 84.51. From a valuation perspective, P non-GAAP forward, 12.98. That is slightly below the sector average. I'm surprised there isn't a 5-year average for travel centers. There probably is, but it's not showing in this database. Then we have P gap forward, 17.69. That is slightly above the sector. So with that in mind, I'm anticipating a growth story. And let's see what we got. Revenue forward projection, 12.29. Sector's running about 7%. 5-year average is running about 7%. So it looks to be a good year revenue-wise for TravelCenters of America. And then EPS growth, that's year over year. EPS growth forward, basically flat. However, the 5-year average has been a little negative. So, this is one where it's going to be a revenue growth story, at least from what I'm seeing in this quick synopsis. So with that in mind, what is driving the growth for TravelCenters of America? That's the part that we have to get into the earnings reports and figure out. But at least we've got the name, and that's really what these quant scores are good for, right? I suppose you could close your eyes and buy every single stock on this list. I don't know how you would spread $10,000 across here, but the way I use it anyway, which I think is helpful, is it makes for some interesting research. And that's exactly what we did today, picking off a few of these names. I can't give away the farm because it's a subscription service, but you get the picture of how this works. It's very helpful. And if anything else, if you're into stock research, it's a great way to pick off some names that maybe if you're building stock screeners like I often do, you might be missing them. You might be over screening so that you wouldn't get something like TravelCenters of America, and then that's a potential lead that you could research down the road. All right, guys, so that's about 5 top picks from Seeking Alpha's quant formula. Dug in there. There's definitely some interesting stories. As always, you're going to want to go another notch deeper. Seeking Alpha has all the tools for that as well. Don't forget to check out that special offer in the description if you're interested. Hope everybody's doing well. We'll see you on the next video.